Good morning, good afternoon, good evening. This is Paul K. Dunn, owner advisor at J& Sons Cash Flow Advisors. And today's topic will be about Bitconnect's fall, the lessons we learned. And I want you guys to stay tuned for the next video coming out, because it will be about the next wave of moves that we'll be making in 2018 to get our passive income on. Now, what we wanted to go through today was just a couple of different lessons to learn, which will give us a very good, I would say, blueprint going forward as to how to handle this type of situation. So, as many of you will know, Bitconnect is a platform that has been up for, it almost made it to a year. I'm assuming it's very close to a year, I believe, is where it made it. It's still a 1 year chart here. I believe Bitconnect opened its doors, it looks like, in January of 2017. So almost a 1 year anniversary. This platform has been up for almost exactly a year. When the platform started, it had a trading volume of about 16 cents to get in. Okay, so what that means is that this platform started, it's a lending platform. What it does is it uses artificial intelligent technology, which they call versatility software, that goes out, it takes Bitcoin into the market, and it trades Bitcoin throughout the day. And as Bitcoin goes up and down in value, it collects either profit or loss, and then it delivers that profit or loss apparently to the users of the platform. And the idea is that you place your Bitcoin in the platform and they pay you a daily interest. It's very similar to what banks do using foreign currency, which is also known as the foreign exchange, where someone goes out and trades money all day, and then they bring home profits and then take a cut in the back end. It's very, very similar to what that is. So as the price of Bitcoin went up and down, as you can see, the price of Bitcoin is this yellow line. So as the price of Bitcoin went up and down, the artificial intelligence would trade in and out of the markets and collect the gains and then deliver them back. Over that same period of time, what also happened is the price of the coin moved from around 17 cents over its span to as high as $423 at one stage. So anyone in that market could have become very wealthy if they placed enough attention at the beginning. They leveraged their money up to the point of, I would say, the very significant value, sort of taking out profits, taking out the original investment along the way and leaving the profits behind. There would have been significant wins in this instance. And what we'll do is we'll go to a calculator and just do what a $1,000 investment would have done if you'd have caught this at the beginning. Okay, and then we'll go more into what actually happened to the platform. So $1,000 would have got you over 5,000 coins in the beginning. We're going to use 5,880. Going to wipe out the rest of the numbers. We'll use 5,880. So $1,000 would have got you this many coins, and if you'd have just waited, let's say you did nothing more than buy the coin at the small value. You didn't even take your money out of the market, but what we'll do is we'll do an exit. So you spent $1,000. You have 5,000 coins. The moment that the coin reaches $1, you can literally take out, I would say the moment it reaches $2, you can literally take out, your original investment. So what we'll do is we'll We'll do 5,080 coins, and then we'll take out the original investment. But let's say you hit it at the peak and you pull it out at $430. Let's just change that symbol here. 5,880. We're going to do times $430. Is what the coin went to. This is what you'll be sitting at. And this is why people are winning. Okay? $1,000 investment. This is what you're looking at. So let's do that again. You have $1,000 in your pocket. You divide $1,000 by 17 cents, which is how much it costs to buy a Bitconnect token at its beginning. Like once it opens its doors. I mean, USD. If you look at the green price on the window here, you're looking at 17 cents. We'll just wipe out the extra in the end. So you're looking at 17 cents USD, which is 0.17. Okay, you divide it by 0.17 here, and that gives you 5,880 tokens at that given time. Okay, so when you do something like that, and we're being conservative. So what we do is we take those 5,000 coins and we sit on them. And let's say someone sat on them until they seen that price. They said, listen, if this thing goes over $400, I'm out. I'm cashing. And you don't even need to cash all of it. But let's just say for this example, I'm cashing. I'm moving on to the next platform. When if this thing hits 400, that's what I'm looking for. Otherwise, we don't move. And then all of a sudden you see it hit that 430 mark. And you say, this is the day. So put $430 in there. You're looking at $2 million from $1,000 investment. This is why you play the game. This is why you're in. Bottom line, risk to reward, hands down, you're not going to see anything like it. And as we move into the next phase of what actually happened with Bitconnect, this is what really needs to be shown. It doesn't matter what happens in the end. What matters is how early you catch it and what you do with the assets that you have once you catch it. Okay, easily. You know, you would have took your $1,000 out. You know, I would say even at, let's say, $2 a coin, you got 5,880 coins. Let's say that thing got to 20 bucks. You're already at 117,000, right? So, you know, at that time, really all you do is you pull out 1,000 worth, which we're gonna do, and then, you know, leave the rest in the market. I mean, what else is there to look at? You leave 116,000 worth of coinage behind. I mean, you've exited the market, and you're still gonna end up close to whatever that last number was. And this is the reality. This is the reality of really what's happening now. I haven't seen too many more ICOs come out that low. However, we have caught one that's going to release at 50 cents, and it's taken whatever Bitcoin, not Bitcoin, but Bitconnect, whatever they've done wrong, whatever a few other lending platforms, whatever their mistakes have been along the way, these guys have looked at them. They've adjusted their platform to make sure that those things were secure, and then they've set for launch here in the near future. And so we want to show you that if you do things correctly and you catch things at the beginning, that the beginning investors are winners. They're getting richer. Okay, those who take those risks at the beginning. Okay, so this is really what we're here to show and educate about when it comes to these kind of investments. Okay, so essentially what's happened is over that time span that they've been available, we've had a lot of people in the market, a lot of people doing lending with them and putting money in. And unfortunately, as it has it, the U.S. began its attack on the platform itself. They received two cease and desist letters that stopped two states from being able to actually use the platform, and from there it was downhill. And really, all that happened from there is the coin itself plummeted, It took a dive, turned for the worse, and then Bitconnect itself, as you can see down here, has now closed its doors. It's halted all lending and exchange in the platform. And from our knowledge, it's trying to get everyone's money back to them. However, since everyone's trying to exit at the same time, you're seeing a lot of congestion and the market is just killing it. And at the same time, the platform is not able to process all of the orders. So you're seeing errors and things like that. So at this point, it dropped, from a high of around 420 to now being around $41, and it's been as low as $19. Now, we've put out a post in our group to show some of the things that happened over the course of this, and it gives us a way to understand that if we make our moves quickly in the beginning, if we catch an ICO in the beginning, make our moves quickly, we're going to be okay. As long as they don't shut their doors within that time frame, we're always going to win because the values go up. We, as smart investors, pull our money out. And honestly, I don't do any disclaimers. What we're doing is we're showing and educating on principle-based investing. I don't really care for the SEC or whatever anyone says. I'm not telling anyone that they can be rich. I'm using simple math here and showing you exactly what's transpired. It's clear to see. You can calculate these things yourself. And then just really encouraging you to make the correct decisions. And in these recommendations, no one's telling anyone to go mortgage their homes. And if you would have came in here and the coin was already trading at $400 a coin, and here you come trying to buy up 1,000 coins, spending $15,000-$20,000 to go into the market, and it was money you didn't have, we would definitely be encouraging you to backpedal from those type of strategies. We try to catch strategies in the beginning. We put in very little, and we end up with good profit from doing so. Okay, so as time goes forward, you're going to see a lot of regulations. We're seeing China try to crack down. We're seeing Indonesia. We don't know which news is fake, which news is real. But in some countries, there's crackdowns. A lot of the new ICOs aren't allowing Americans to participate because America is, in my eyes, America is idiotic. They really want to continue the wealth trend. Wealthy stays wealthy, poor stays poor, middle class will be there soon. And this is the problem that we're trying to take care of from a standpoint of decentralization, from a standpoint of being able to control our own investments. If we're going to make mistakes with our own money, let us make those mistakes. But don't lock us out and then make rules for the wealthy different from the rules that you make for the lower income earners, because at the end of the day, it may be set up to look like you're protecting, but really what you're doing is categorizing in a way where all of the really good investments are only going to the wealthy people. And this is a problem to me and everybody in the Black community that struggles from paycheck to paycheck, or are just really being withheld knowledge. The correct knowledge is not being taught, it's not being executed. And to me, this space is a great space to go and train in. You're not dealing with stock. You're not dealing with regulated currencies, which you are locked out of trading for the most part. There are some platforms coming about where you can trade your own stocks, but stocks have become a big boy game, a big money game. If there's not enough in the stock market, it's very difficult for you to win anything worth looking at or worth trying to live off of. So at this point, man, it's really about being able to use the principles of investing correctly. There's plenty of books that you can read on wealth principles, and really we just using principles. This is not financial advice, so to speak, when it comes to me taking your money from you and placing your money somewhere, but this is financial empowerment that's saying, listen, you need to be, if you're going to put money anywhere, if you're going to expose money to risk in order to make a gain anywhere, then you need to follow principles, period. And we don't care who's looking. We don't care what tax preparers are trying to put in front of us to scare us away from being wealthy. Really, what we need to focus on is how do we make money in these type of markets, because the skill set will translate to your everyday life. You will understand how to buy an asset or something that's conveyed as an asset, and then you will be able to know what to do in order. You will know how to make a strategy for yourself. And this is something that not a lot of people can teach, because at the end of the day, they're so scared of giving that advice. And then the advisors that are going through the courses and being governed by the SEC are not taught to give that advice back, or educate the people. They're just really taught how to do it in a manner where you're shielded from learning. They'll do it for you. And that's a problem. You need to teach people how to fish, not fish for them, especially when it comes to wealth and money. Money is something of great importance. And when you don't have it, it becomes even more important, because it puts you in positions that you wouldn't choose to be in had you had enough money in the first place to do something different. And we don't want anyone overseeing us in the manner of telling us what to do with our hard-earned money, or trying to take money from us that hasn't been earned. We go out and we earn a paycheck every month, and then someone sits behind a desk or in a White House and tells us that they're going to take this much from us because they're doing a better good with it. And some of the times they are, most of the times they're not. They're really handing it over to more wealthy people and allowing the wealthy people to control what we do. And at the end of the day, I think that time is coming to an end. And there needs to be some sort of balance between economics and how democracy is ran versus how we run capitalism, because it's not an equal playing field. And though there's some protection in what the government tries to do by banning things and stopping a few things, they try to stop people from losing their money. But unfortunately, that's something, to me, it's similar to walking. It's something that you don't want to stop people from experiencing. If you're going to be scared after you've lost money and you're never going to invest again, then so be it. You can be broke the rest of your life. That's a choice that you should be able to make. But don't stop people from taking risks because they're uneducated, and then you don't educate them in order for them to be able to take those risks in the right fashion. It doesn't work. It really just keeps a large group of people as slaves. That's really the key. A large group of people will continue to run the economy, and work for the rich people, and the rich people will remain rich, and the poor people will remain poor. Middle class will, they will get what's given to them, and no one wants that anymore. We're moving away from that. It's really progressing. We're evolving from that, and the first people that I'm targeting are my Black community needs to understand the wealth principles. They need to understand investor principles. So yeah, I am saying investing. I will be calling things investments. I will be having you think like an investor, because at the end of the day, that's the only thing that matters. It really is the only thing that counts. And if someone tried to stop a baby from walking just because they fell over, we'd have a lot of people crawling today. And I don't think that would be functional. Knowing what we know, you're built to fail and to learn from your mistakes. And if you're shielded from making mistakes and learning from them, then you'll forever be scared of taking the risk, because more than likely you're going to lose. You have zero education in doing what you're trying to do. You have zero experience in feeling what the loss is like, so it's difficult for you to correct the course. And this is, to me, this is 100% no. Together we can. Investing is power. This is period messages for me, like 100%. That's what we are in 2018. And all we focused on is cash flow and income. How can we raise that? And our first step is going to be building a nest egg. And what we want to learn from something like Bitconnect is that uh, things go up and down. Nothing is forever. The one thing that we can guarantee on this planet is death. And today, this company died. Okay. However, it gave a really long run um, in terms of being the people who were there from the beginning. It gave a long enough run for them to make the money they needed to make and back out. However, for a lot of other people, they have to pay attention to where they're coming into the market. Timing is everything. So today, Bitconnect died. We wanted to just show a few things that happened when Bitconnect died. We had a lot of posts that we put up, a lot of different pictures to sort of show the timeline of what happened. But we watched the burn of Bitconnect. And you know, I tracked Bitconnect, but I never invested in it. And it's because I begin to see things take place that weren't economically correct. So, you know, to me, I don't move when someone says scam, because I can type in Walmart scam and something's going to come up. So that to me is becoming more of a clickbait scheme than it is actual information. So if someone's going to call something a pyramid scheme or a scam, it's not going to deter me from investing in it, because honestly, everything is pyramid schemes or scams. The question is it going to hurt me or is it going to help me? And how long do I need to be in it? And do I have the available funds to risk in order to benefit from it? That's really the questions that we ask. We don't care if people think it's a scam or not. However, the arguments is what I look at. So if someone's going to call something a scam, a lot of times we'll see valid arguments that we can then go and educate ourselves around and see, okay, so if this does happen, how do we protect ourselves? And unfortunately for Bitconnect, what we started to see from the lending platform is that they were we're turning in our Bitcoin and they're giving back Bitconnect tokens, which to me is it's sort of a gateway. In order to get out, you're going to have that Bitconnect token, meaning if the Bitconnect platform crashes and they hand you Bitconnect tokens back, it's worthless to you. You can't convert it back into Bitcoin because it's not worth anything. So we stayed still for a little bit just to see if there was a way that we can exit. Another problem that we found when we showed up is that the price was at $300 already. Based on their market cap and how much they were making on a monthly basis, we really couldn't see value in going in at that high of price, because what we could see is that if this thing got hit and we couldn't come out of the market quick enough, we would lose more than we gained. So we sat and we waited, and then right when when it got real interesting is all of a sudden they wanted to launch a whole new initial coin offering. The problem with that is that they had already made, based on their market cap, they already had billions of dollars in circulation. They were very, very close. They were very, very close to almost tens of billions, but they never got there. And what we could see is that when they offered the new ICO, first of all, they started a whole new coin, which you can see here is called BCCX. Then they launched the coin at $50 a coin. That price range is ridiculous, being that just a year before, when they very first launched Bitconnect, it was 17 cents. So where was the value in buying a coin right when it begins at $50? Like, how high could it really move? So that really painted a red flag on Bitconnect for us, because they started something from the ground up again, made it almost 300 times more expensive than the first thing they started. And the first thing they started, there was no real reason to believe that that was going anywhere. And then they make it not available to US citizens. And unfortunately, guys, that many ticks in the negative box on just really doing moves in the wrong direction really said there was a problem coming. And sure enough, The server was I mean, it was no more than, I would say, not even a day after Bitconnect X launched the new ICO. All of a sudden, they're getting hit with a server problem, which they call DDoS. They're getting hit, and all of a sudden, they're down for 2 or 3 days. Everyone's scared now, and here we go. That's when the crash really started. So to me, what we learn from this is we have to pay attention to flags, and we go in the beginning protecting ourselves. And the very first thing that we learned is that being around at the beginning is very, very lucrative. So whoever caught this thing at the beginning, they're not concerned about it going down right now because they've already pulled out. Anyone who's gained commissions for bringing people into BitConnect, anyone who bought the coin at 17 cents, spent $1,000 or more, those guys have already cleaned up, moved out. Okay, that's really it. And so what we learn from that is that we really want to, it's risky dealing with new initial coin offerings. Is very risky because you don't really know where your money is going. However, the risk to reward is when you're putting your money in and it's money that you can lose. It doesn't matter anymore. It's like, listen, if this thing goes, we're just going to go find the next one. So we make sure that we do our research thoroughly, as thorough as we can without wasting time, because timing is everything. And then we just pull the trigger. And sometimes we win, sometimes we lose. We're using principles of investing. So up to this point, there's been rare losses. There's been very rare losses. We've lost more in other markets outside of cryptocurrency than we've lost inside of cryptocurrency. So at this point, we're going to keep pushing forward, and we hope that as a team, as a group, really, that we can do some things together and really show how we can make this thing work. The new things that we're doing may not be offered to U.S. citizens, but our opinion on that is that we don't care anymore. We're away from caring. If something's going to happen where we need to pay tax, then so be it. We'll pay tax. But I'm going to keep striking at this thing until hundreds of thousands of dollars push out of the other end of it. Okay, and if I need to pay tax on that, then cool. Like I've heard that it's better to ask for forgiveness than permission, and that's what we're doing right now. Because no one's going to stop our wealth from moving. We don't need to be regulated. You can, send out some rules and do what you need to do, as a country. Try to protect where you can. I understand what the risks are. My goal is to do this thing risk free, and either that's by putting in money that you can afford to lose all of it, or you put in money that you can afford to risk for a certain period of time. If you lose it, you're okay, but your main goal is to double it so you can pull it back out, and from that point on, you're a winner. These strategies keep us moving forward, and it gives us a lot of education in being able to handle this. Almost like catching a stock market right when the doors open. And this is a market that people can really learn and be educated in. So I won't make this one too much longer, but really look out. We have group dynamics coming soon. Make sure you make sure you go to the YouTube channel and you like the financial intelligence. All you have to do is type in Jay and Sons Cash Flow Advisors in YouTube and we'll come up. Make sure you subscribe and like to the channel so that you can get access to our cash flow assets, replacing active with passive income in our crypto investing. Because at the end of the day, most of the people that I deal with, they want to increase their cash flow, your monthly in and out, your yearly in and out. By having a lot of disposable money, you can do a lot more things than most other people who are living paycheck to paycheck. That's just the reality. So every opportunity that we're embarking on right now is to get us to build a large enough nest egg so that when we put it back out there to get interest on it, it's paying us a significant amount a month, daily, a week. And we'll share more about those things in our next video. So we'll tell you guys where we're putting our money. We'll show you where we're putting it. Our new ICO will be launching on the 18th, and we will be documenting that. So we'll be putting money across into that and documenting it. And hopefully nothing gets caught up there, because with all of this movement and people shutting down this and shutting down that, we just hope that we can get everything to our new ICO in a timely fashion without any hiccups. But make sure you like and subscribe. Make sure you're in the group. Make sure you're giving your opinions. Make sure you're giving your concerns more than anything. And we can build this thing as a group. Like I said, group dynamics is coming out. Imagine what would have happened if enough people started something, or started the Bitconnect, how we showed the $2 million there from a $1,000 investment. Imagine if 10 people would have just split that $1,000 and all went in. It would have lowered the capital amount that each person put in, and then it would have really minimized the risk at that point. But that end result would have took a lot of people forward. It would have took more than just one person forward. And that's the type of things that we're doing, where you can invest $100 to $200, but because we're investing enough as a group, we're getting a massive outcome in the end. And we're going to keep shooting at this thing until one of these things hit, because we're very confident that we're going to catch one. And really, that's all it takes, is for one or two of these things to hit. It's being in the game. Michael Jordan's one of the greatest players ever lived. I told someone about this story before. His shooting average was about 460 thereabouts, which is almost like a 46% shooting average, meaning he missed more shots than he ever made. Problem was that it didn't matter. That's the key to the story. It didn't matter because he was present in the game when it counted. And that's what we want to, that's what we want for you out there listening. You have to be in the game when it counts. You have to be paying attention. You have to be willing to be a lion for your family, for your own finances, and make sure that you're the one in control of them, not someone else. So look, until the next time that we can catch up, this is Paul K. Dunn. I wish you abundance, prosperity in everything that you do, success in everything that you do. And until next time, I wish you good morning, good afternoon, good evening, and good night.